Sup guys, Ovodoff here. This video is gonna be just a talking head, and I labeled it Crisis in Confidence because in my opinion this is what we're living through right now, because I see a lot of narrative that we're currently undergoing the banking crisis that we kinda like in 2008, and I think this is completely different than 2008. And this video I just want to go through the latest events in the banking space and where we're at now, and give my 2 cents on what I think actually is happening and a little bit of why this is happening, I guess. So it's just gonna be a little bit of a mumble. So first, let's just do a couple of mental marks. The first would be that the majority of banks in our world using the fractional reserve system. That's the standard of the industry. And second point is that it's generally considered not good for banks when Fed is increasing, and all central banks across the globe increasing their interest rates, because when the money is cheap, when you have interest rates 0 or close to 0, it's good for the banks. When the raise rate, it's always, not always, but usually worse. So given that, how did we end up in this position? When COVID hit, we got tons and tons of money across the globe airdropped. And for some reason, the Fed and other central banks, they thought this would not cause a major inflation. So they were a little bit late to the party, not a little bit late, but I guess a lot late to the party in terms of preventing inflation. They had to sort of react post factum. Again, everything in this video is my subjective points of view, not on financial advice. I'm just mumbling here, but let's carry on. And so going back to 2020, for example, I understand why the banks could potentially load up on a long-term treasury, because they sort of believe the narrative that we won't be hit by inflation. So what happens then? We're getting hit by inflation, which currently a peak was in summer 2022. So Fed and other central banks across the world start raising rates. And the Fed is doing that so aggressively. It hasn't been done before for the last several decades at this speed, because the last couple times they raised, they have done this more gradually, giving people and the banks and institutions more time to react. This was not the case this time. Yeah, and so up until recently, nobody actually raised any concerns in terms of it's gonna completely destroy banks. The narrative of that wasn't there, because some banks definitely were having problems, but we never heard about these. And recently, when all of this started, one bank, 3 banks in US going under, and now Credit Suisse is technically going under. It's getting acquired by UBS, which we talked in the previous video, but essentially it went belly up. And a lot more banks are currently at risk. The banks themselves, the deposits. So now out of every corner, you can hear that we have this crisis, and that a lot of banks that are also vulnerable to that, a lot of banks that are sitting on billions and billions and billions of unrealized losses, which may be true, but this fact itself doesn't collapse the banks. Bank runs collapse the banks. And nowadays, the news and information travel so fast that between the rumors of insolvency until the bank run, you can literally have 1-2 days. And everybody, if they believe what's being said, you'll have the bank run. And I don't care in what financial state is the bank itself. If you take even the healthy bank, it's still fractional reserve bank. if everybody who has money in this bank will do a run on the bank, most likely it will collapse. So here we come to the point of this video, which is, it's not, in my opinion, a banking crisis by itself. Yes, some banks are probably in trouble. They're sitting in a lot of unrealized losses. That's just the reality of current economic conditions and the reality of their poor risk management at times. I mean, not everybody is managing the bank poorly, but we see cases where risk management just take SVB. Effectively, risk management was not there. Like, they didn't have a risk manager for quite some time. Then they hired somebody, but that was just a little bit too late. Maybe they haven't done the adequate job at it. We see tons of examples throughout the history where people are not managing the risk properly. But again, even if they are managing risk properly, they still have some problems. Some banks have some problems due to economic conditions outside, basically in the world. And so right now it looks more like informational warfare, where banks really, like banks, the governments, they need to calm people down and sort of promise people that their deposit's going to be secure and made whole in the events of like potential bank collapsing. Because if you take a regular person, for example, now, and this regular person holding money in some regional bank for better, well, because of the better conditions than in, say, in JP Morgan, right now the most logical thing, given the current state of everything, the most logical thing would be take this money out and go, for example, deposit it in JP Morgan or deposit it somewhere. And if you hold in more than 250,000 that is insured by FDIC, then yeah, I mean, you better split this somehow and basically protect your capital. And this is not panicky thing. This is rational thing. Yet this rational thing can potentially kill regional banks. And that's the pickle of the situation, in my opinion. That people, they don't want to do maybe the run on the bank, but you have to protect yourself. If somebody says that the bank that you hold in money is in trouble and insolvent, you go and you take your money out. And even if you're not fully believing in this information, if you're like, okay, 50-50, this is actually FUD, and it has nothing to do with reality, but there is 50% chance they're right, I better be secure, I better move my money, and that's completely fine. So we are arriving at this situation where regional banks, they're really in trouble now. And on the other side of the spectrum, if we take, for example, the first, what's the name? First Republican Bank. Recently, 11 other banks, including top 5 banks in the US, they deposited around $30 billion there to kind of show, well, first to provide liquidity, and secondly, I think it's more of a informational side where they showing basically that they stand together with other banks in the sector, because that's also very important. Another example of that is there are publications now that Warren Buffett is in talks with the Biden administration. They're not saying what they're discussing, of course, but you can probably guess that it could be about some advice, but most likely it's about the public investment in the banking sector, because I think this would be huge, not the investment itself. If Buffett goes and like drops couple billion in banking stocks, for example, sector, that's gonna help, but not by much. I mean, realistically, couple billion is a drop in the bucket. Still will help, especially considering that banking stocks are not in good shape now, to put it mildly. But the effect, if he publicly says that I am confident in the banking sector and like these banks that I'm buying stocks of, that will go a long way, I think, because he's one of the most recognized investors. And actually, one more thing I want to talk about, how I see some influencers in the crypto industry. It's insane. For me, this is personally insane. The narrative that like everybody's blaming Fed now, right? And Fed is only doing what they said they're gonna be doing, raising rates. And before banks started collapsing, nobody said anything. Now it's like, oh, the Fed is the source of all evil. The Fed, I actually saw this the other day from, I don't remember who, but I remember there was a huge influencer with like 300,000 subscribers, or maybe like 400,000. The point there was like that Fed is started increasing interest rate to purposefully collapse the bank, cause crisis and fear in order to adopt CBDCs. And I'm sitting there like, holy cow, what is this? What are you talking about? Like, it's insane. It's insane. The narratives people are pushing is just crazy to me. But again, looking at the global picture, again, most media is not so retarded, right? It's just a tiny portion. But still, the narrative is negative. Fed's going to be a huge factor in terms of how they're going to play this, how they're going to calm people down. I think, again, is very, very important here to reinstall the confidence in people. Because right now the confidence is not there. And secondly, I think there should be a distinctive period of time when nothing bad happens. Because in our world, in media, like, people forget fast whether or not it's bad things or it's good things. People forget fast. So very short, like, memory span. And so right now there's a lot of like, this bank collapsing, that bank collapsing, this bank has problems. So it's like constant stream of bad news. And once it spreads out and we have like no bad news throughout some period of time, it will become better. That's just like my understanding of the situation. And I don't think we're in financial Armageddon. I don't think everything's gonna collapse. Times are tough. Economic conditions are tough. It's very tough to be the Fed and central banks all over the globe, because now we're facing another obstacle. Like Fed, for example, facing another obstacle. The last week, when they increased their balance sheet by 300 billion, adding liquidity to the market, basically, that's undone the half of the year of tightening, of reducting the balance sheet. Half of the year undone like this. And who's to say that they won't be forced to continue on that trajectory? So they need to be very careful in their language, in their phrasing, on how they're gonna move forward, because I think that's gonna affect a lot. It's gonna affect the banking sector, it's gonna affect the markets, equities, bonds, crypto. It's gonna affect everything. Yeah, so this is just my little rant. I probably forgot a bunch of things that I wanted to cover, but that's fine. I'm just gonna leave this video here to come back to it later. If you watched it until now, thank you a bunch, and I'll see you next time.